for the fiscal year of 2019 on 21st and the 22nd of January 2019, amidst concerns over the slowdown in global economic activity arising from ongoing trade tensions, tightening global financing conditions, and mounting external debt in emerging markets and developing economies, EMDEs. On the domestic front, the resurgence of moderate inflationary pressures and possible threat to accretion to external reserves due to softening crude oil prices were noted by the committee. Committee also reviewed the developments in the global and domestic economic and financial environment in 2018, as well as the risks and outlook in the short to medium term. 11 members of the committee were in attendance today. The global economic developments. Committee noted the divergence in performance of most economies in 2018, leading to moderating the global output. In addition, a combination of factors including financial market volatilities, trade wars between the U.S. and key allies, continuing monetary policy normalization by the U.S., Brexit, the determination of the European Central Bank's asset purchase program in December 2018, and the slowdown in the Chinese economy further heightened uncertainties for the global economy in 2019. Consequently, global growth has been downgraded by the International Monetary Fund to 3.5% in 2019 from 3.7% in 2018. The committee noted a gradual increase in global inflation, with inflationary pressures intensifying in some emerging markets and developing economies who have in the recent past faced currency depreciation arising from capital flow reversals, are also arising from progressive monetary tightening by the Federal Reserve. It is, however, expected that the recent decline in oil prices may reverse the trend, especially for oil importing economies, and thus moderate currency depreciation in these economies. Domestic output development. The committee noted the continued recovery in output growth in the domestic economy after the 2016 recession, as real GDP grew by 1.81% during the third quarter of 2018 from 1.5% during the second quarter of 2018. The services and agricultural sectors continue to drive output growth, contributing 1.19% and 0.56% respectively. However, the persistence of herdsmen attack on farmers, cattle rustling, and flooding in some parts of the country affected agricultural and livestock output. Based on the Manufacturing and Non-Manufacturing Purchasing Managers Index, the PMI, output grew for quarter 4 of 2018 is expected to expand further. The observed performance in the PMI was attributed to the stability in the foreign exchange market, improvement in the flow of financing resources to the real sector through the various interventions by the bank, effective implementation of the Economic Recovery and Growth Plan, and the increase in non-oil sector GDP. The output for growth, however, remains fragile as the late implementation of the 2018 budget and the residual impact of flooding and security challenges constitute headwinds to growth. The committee therefore believes that the effective implementation of the 2018 capital budget and the Economic Recovery and Growth Plan, improvement in the security situation, and continued stability of the foreign exchange market will enhance aggregate demand and output growth. Developments in the money and prices. Committee noted the broader measure of money supply, M3, grew by 16.58% in 2018, above the provisional benchmark of 13%. Broad money M2, however, grew by 12.17% in December 2018 over its level at the end of December 2017, in contrast to the provisional benchmark of 10.48% for 2018. The increase in M2 reflected the growth in net foreign assets of 18.54% in December 2018, above its provisional benchmark of 14.5%. Credit to the private sector rose marginally by 12.97%, below its provisional benchmark of 12.4%, while credit to government grew by 33.7% in December 2018, above its benchmark rate of 7.4%. The committee noted the appreciable growth in credit to the private sector, which had been a constraint to growth in the real sector, and expressed optimism and happiness for further improved lending through the sustained efforts of the bank to enhance credit delivery to small and medium-scale industries in the economy. The Monetary Policy Committee thus commended the management of the bank for its efforts so far in sustaining credit delivery to the real sector of the economy. The resurgence in inflationary pressure in the economy was of concern to the Monetary Policy Committee, as headline inflation year-on-year inched up to 11.44% in December 2018 from 11.28% in November 2018. The increase in headline inflation was driven by food inflation, which rose to 13.36% in December 2018 from 13.3% in November, while core inflation declined marginally to 9.77% in December 2018 from 9.79% in the previous month. The committee, however, observed that the uptick was attributed to seasonal factors which impacted mainly on food. Consequently, all measures of inflation, month-on-month, showed a decline. Thus, headline food and core inflation declined to 0.74, 0.81, and 0.50% in December 2018 from 0.84, 0.90, and 0.68% respectively in November 2018. The committee observed that the near-term risks to inflation remain the residual impact of flooding on agricultural output, insecurity in parts of the food-producing belts in the country, exchange rate pass-through to inflation due to weakening of oil price, and campaign-related spending towards the 2019 general election. Accordingly, the Monetary Policy Committee urged the federal government to sustain its current efforts towards improving security to ease supply chain bottlenecks. Money market interest rates in the review period generally reflected the level of liquidity in the banking system, as the average interbank core rate declined significantly to 7.17% in November 2018 from 14.18% in October 2018. The open buyback OBB rate, which stood at 6.57% in October 2018, increased marginally to 6.76% in November 2018. On December 24th and 31st in 2018, the interbank core and OBB rates, however, closed at 14 and 18.94% respectively. The improvement in the net liquidity position and interest rate reflected the combined effects of the CBN quasi-fiscal operations, OMO auctions, maturing CBN bills, and foreign exchange interventions, as well as statutory allocations to state and local governments. The committee observed the decline in the equities market for the most part of 2018. On a year-on-year basis, the all-share index decreased by 17.81% from 38,243.19 at the end of December 2017 to 31,430.5 at the end of December 2018. The all-share index further decreased by 1.35% to 31,005.17 as of January 2018. Similarly, Market capitalization decreased by 13.87% from 13.61 trillion at the end of December 2017 to 11.72 trillion at the end of December 2018. It further declined by 1.37% to 11.56 trillion naira as at January 18, 2019. Committee observed that these developments largely reflected the impact of the progressive monetary policy normalization in some advanced economies and the sustained profit-taking activities of foreign investors arising from perceived political risk in the build-up to the 2019 general elections. The Monetary Policy Committee, however, remained optimistic of the gradual reversal of the current trend in the medium term, given the current stability in the foreign exchange market and the external reserves position, as well as continued improvements in key macroeconomic indicators. The committee noted the relative stability at both the bureau de change and the investors and exporters window of the foreign exchange market, supported by the bank's proactive exchange rate management policies. It also observed with satisfaction the contribution to stability in the market of the implementation of the bilateral currency swap agreement with China and the inflow of the $2.8 billion Eurobond. Committee also noted the marginal increase in the external reserves from 42.54 billion as at the end of December 2018 to $43.28 billion as at January 21, 2019, noting that these improvements would further strengthen investor confidence in the Nigerian economy. The overall outlook and risks. Forecasts for key macroeconomic variables in 2019 portend a positive outlook for the domestic economy. Output growth is expected to be driven by fiscal stimulus from increase in oil and non-oil receipts to support the federal government's economic recovery and growth plan. The economy is projected to grow by 2% according to IMF, 2.2% by the World Bank, and 2.28% by the Central Bank of Nigeria. Key headwinds to these forecasts, however, are softening oil prices, persistent security challenges arising from insurgency in northeast and herdsmen attack in some parts of the country, and perceived political risk associated with 2019 general elections. The outlook for inflation in the first half of 2019 is mixed, with the expectation of an increase in near term before a gradual decline towards the mid-year. Inflation is expected to rise marginally amidst powerful tailwinds, which include increased spending in preparation for the 2019 general elections and continued disruptions to the food supply chain in the insurgency-prone areas and herdsmen attack on regions of the country. The MPC appraised the possibility of external shocks in 2019 as the outlook for the global economy remains uncertain due to the effects of ongoing trade tensions between the U.S. and its key allies, slower growth in China, unclear direction of a Brexit, negotiations and continuing monetary policy normalization in some advanced economies. The committee was of the view that oil prices may, however, remain relatively stable with the $50 per barrel bracket in view of recent OPEC production cutting actions. Committee's considerations. The committee noted with satisfaction the performance of the economy in 2018, highlighting the achievements in key macroeconomic indicators in the face of global uncertainties and domestic challenges. In particular, it noted the stability in the exchange rate, stable accretion to external reserves, moderation in inflation, and gradual improvement in output growth. The MPC further noted the low but gradual improvement in the real GDP in the last 6 consecutive quarters, commencing from the second quarter of 2017. MPC noted that given global economic conditions and the risk confronting emerging markets and developing economies in recent times, as well as the productive capacity of the economy, the managed float regime management of the central bank has delivered the most optimal results when compared with other emerging markets in recent times. Consequently, capital flows into the domestic economy has continued unabated after an initial lull. The committee considered the risks to the global economy, noting the downward revision in the projected global output in 2019, the adverse impact of the trade wars between the U.S. and its major trading partners, the likelihood of lower crude oil prices, impact on capital flows, of continued monetary policy normalization by major advanced economies, distorted signals of Brexit negotiations, as well as pockets of other socio-political tensions and perceived election risks on the domestic front. Committee recommended the government's focused expenditure on investment in infrastructure and urged the federal government to sustain the pace towards addressing the infrastructural deficit in Nigeria. It noted that the immediate impact of this approach on GDP may be slow in coming, but eventually expand the economy's productive base, reduce unemployment, and increase aggregate demand in a more sustainable manner and over a long period of time. The committee acknowledged the strategic role of the private sector in economic growth and remained concerned over the slow growth in credit to the private sector through 2018. Noting the sudden increase at the end of December 2018, the MPC commended the initiative of the Bankers Committee in addressing the phenomenon of low credit to the small and medium-scale enterprises through partnering with the Nigerian Incentive-Based Risk-Sharing System for Agric Lending, the NIRSAL, to establish a national microfinance bank with branches in all states and local governments of the Federation to provide low-interest rate lending to small-scale businesses in Nigeria. A further initiative by the NIRSAL with the CBN to de-risk lending to small-scale enterprises is also being fine-tuned. On external borrowing, committee noted the increase in the debt level, advising for caution, noting that it could fast be approaching the pre-2005 Paris Club exit level. The MPC also noted that although there was an increase in inflation rate at the second consecutive month, based on month-on-month inflation, continued to moderate, indicating that the year-on-year measures will also moderate in the near term. This is supported by the stability in the Naira exchange rate and thus urged the bank to sustain this stability. To this end, it welcomed the narrowing of the exchange rate premium between the BDC segment and the investors and exporters window of the foreign exchange market. Committee also noted with satisfaction the gradual reduction in non-performing loans of our deposit money banks, which has further strengthened their balance sheets. The committee believes that as government pays off contractor debts and other obligations, there will be a sizable reduction in the non-performing loans in the Nigerian banking industry. Committee also noted the attempt by the government to broaden the base of the value-added tax, the VAT, and urged the authorities to expedite action in that respect, arguing that increased tax collection will reduce the pressure on government expenditure and create fiscal buffers to improve macroeconomic management. The observed and recent high foreign capital inflow into the Nigerian economy, despite the perception of election risks, is evidence of the confidence of the international community in the country's macroeconomic management and provides a compelling reason for the committee to await clarity on macroeconomic performance after the general elections in February and March 2019. In the light of the observed risks confronting the economy, including the global and domestic inflationary pressures which have intensified the risks of currency depreciation, the MPC was of the view that a losing option was very, very remote. Weighing the balance of its judgment on price stability conducive to growth, the MPC felt that tightening will result in loss of the gains so far achieved, noting that this may drive the banks to reprice assets, thus increasing the cost of credit as well as elevating credit risks in the economy. It will also worsen the position of non-performing loans of the banks. The committee also felt that tightening would dampen investments and hamper improvements in output growth, given the already fragile growth performance so far achieved. Committee's decision. In the light of the above factors, the MPC decided by a vote of all 11 members to keep the policy parameters unchanged from their current levels. In summary, the MPC voted to 1. Retain the MPR at 14%, retain the asymmetric corridor of plus 200 basis points and minus 500 basis points around the MPR. 3. Retain the CRR at 22.5%, and 4. Retain liquidity ratio at 30%. I thank you all for listening.
Thank you, Mr. Governor. Somebody wanted to clap. Yeah, because our communiques are very clearly stated. And so there will be no need for questions. But all the same, welcome to a new MPC year. If you have questions, please could you come up? One question, one name, one organization. And please remember our house rules. We will not entertain questions except those that are related to the issues raised in the communique. Thank you.
I'm Olatokewa from Kiss FM. My question is, I just need clarification on the MTN infraction of 1.8 billion. I know as at the last time it was settled out of court, the MTN said it was going to give 56 billion dollars, and I know CBN did not say anything on that, so I'd like to know why they didn't put a figure to it. Then last week, I know CBN released on these items that will be banned. I'd like to know the rest of the, that will make the 42 that will be banned. Thank you.
No, say that again, please. Say that again.
In terms of items that will be banned, initially it was 41, and in December you added fertilizer. But as of last week, you said there are others that will be banned that will make it 50. I saw the release. So I'd like to know the others that will be, if at all it will be.
There was no release on that, please. Please, let us respect the house rules.
It's okay, please.
Good afternoon, Governor. My name is Issa Abdullah from Telegraph Newspapers. It's a good sign that external reserve is getting accurate. But considering the performance of Nigerian economy amidst other emerging economies, what is your assessment of the performance of the economy in terms of global context? Okay.
Good afternoon, Governor. Nancy Naji.
Hey, madam. Welcome. How is the boy?
He's very fine, sir. Thank you very much. All right, let me ask this question. Recently, at the presidential debates, there was a certain presidential candidate that made references and criticized the policies of the central bank as well as the FX market. And he said that if he will be elected, he would liberalize the foreign exchange market, allow unimpeded imports, and remove capital control. What are your comments to this?
Thank you.
Hey, Governor, my name is Udo from Premium Times. Happy New Year, sir.
Thank you.
Now, you've talked about the impact of the rising debt profile of the country, which you are saying that if government does not do something, we might go back to pre-2015 levels. So how bad is the debt situation now, sir, and what do you think government can do to stop it?
Ramat.
Good afternoon, Mr. Governor. My name is Rahama Saidu. I work for Radio Nigeria. I watched President Muhammadu Buhari's interview on Arise TV last week. And in answering one of the questions, he specifically directed journalists to ask Central Bank of Nigeria for further details on the performance of the economy as regards the agricultural sector and the foreign exchange market. Since he directed us to ask, well, let me ask, could you further please give us more details on facts and figures on what has been achieved in these sectors? Thank you.
To provide facts and figures. And we deal on facts, and you deal on numbers.
Good afternoon, Governor. My name is Elisha Balagogo. I work for Bloomberg. Are you able to confirm reports that the CBN has asked banks to reverse interest charges on all subsidy-related loans? And if so, I mean, what's the rationale behind this move in light of the obvious earning implications for some of the banks?
Good afternoon, Governor. Oyewachukwu here from Business Day. Mine is on the differentiated CRA regime you announced last year. Can we get a sense of how much that has worked? Because it seems that banks are kind of not leveraging that window. Thank you.
Okay. Thank you, sir. Mr. Governor, Happy New Year. I have a concern. I'm proposing closing my accounts because it appears that my accounts in the banks, because it appears that banks no longer obey the confidentiality of customers' procedure. I mean, relationship in terms of revealing account details, deposit and withdrawal. I want to know if you are concerned about this. Should I go ahead and close my account? Or are you doing anything to these banks that are not maintaining this confidentiality clause that they hold their customers? Thank you, sir.
Well, I think that's all. Okay.
Good afternoon, sir. My name is Elizabeth Christopher from Voice of Nigeria. You said the NISA is planning to work with other stakeholders to set up microfinance banks for the grassroots. I don't know what the NISA will be doing differently, because we've seen other initiatives that, is it that it's not friendly for the SME to approach the banks and access those loans, or what is different this time that they should be expecting?
My name is Chinemariam Joseph from Silverbird TV. The withdrawals by banks, the charges by banks, especially the 65 naira they take after you withdraw with your ATM card 3 times. We find out that some banks are still, collecting these charges. I want to find out how the Apex Bank is relating with these commercial banks to ensure that these charges are reduced or regulated. Thank you.
Thank you very much. My name is Oluyemisi Dada. Good afternoon, sir. From White Springs Media. December, sir, during the bankers' dinner and during the bankers' retreat as well, you made mention of the National Microfinance Bank coming on stream in January. So we're in January now, and a lot of people are looking forward to it. Can we have the update on that? Thank you.
The last question.
Good afternoon, sir. My name is Onoko, Nigerian pilot. Sir, it is interesting you said that the MPL is going down. So, deposit money bank's MPL. Now, sir, I would like to know what is the state of the MPL now, so that it will be a good news for the system.
Yeah, thank you. This is a huge harvest. Governor, over to you, sir.
Yeah, thank you very much. Well, first of all, on the issue of the seeking clarification on MTN's matters and all that, and let me say that I am very delighted and gladdened that at last, I know I came here and I promised that the matters between the MTN and the CBN and the banks will be resolved amicably and equitably, and that everybody will be happy. I'm glad to tell you, yes, in November, we held a round of meetings with the MTN officials, even from South Africa, and by December, we concluded those engagements and the matters were resolved. It resulted in a notional, I repeat, it's not a fine, not a penalty, a notional reversal of the sum of $53 million, amounting to about 19.5 billion naira or something like that, and this amount has since been paid by the MTN, and the terms of settlement of these matters have already been lodged at the Nigerian courts. On the issue of the 41 plus 1, which is 42 items, items that are received from foreign exchange, and the fact that we're contemplating increasing to 50, let me say that what I had said was this, that the Central Bank of Nigeria will get even more aggressive to see to it that food, and any or all food items that can be produced in Nigeria and consumed in Nigeria that are currently being imported into Nigeria, that we would go through our records, and once we convince ourselves that these products can be produced in Nigeria, we'll place them on the FX restriction list. What does that mean? That you cannot source foreign exchange from the Nigerian foreign exchange market to import those items into Nigeria. But if you have free dollars, you can bring it in, but that you will not be able to even make payments for those from dollars from the Nigerian foreign exchange market. This is because we think that the initiatives that Central Bank had put in place in the past to cut imports and diversify the structure of the Nigerian economy is yielding results, and we would continue to be that aggressive. And indeed, we also went further to say that we would investigate the Economic Intelligence Department of the CBN together with the Economic and Financial Crimes Commission. We will investigate any company, any individual suspected of bringing these items either through any border, through smuggling or any means, for money laundering and economic sabotage. And that if we discover and conclusively that these companies or individuals are involved in bringing this thing in through money laundering and economic sabotage, that we would write to all the banks, we'll blacklist those companies, and those individuals running those companies or who owns those companies, that they can no longer operate any bank account in any Nigerian bank. There is no need to talk about prosecuting you, but it is just to say we will not allow you to do business again in Nigeria, and of course you know what implication that means.